Hope you're having a great day, and today I'm going to treat you all to a second video of the day. So as always, if you found this useful, remember to like, share and follow and subscribe, and I'll get straight into it. So today what I want to do is cover what the changes in the spring statement actually mean to your average business owner. And I'll just give you a quick overview of what those changes are, and then what you really need to do differently from a tax planning point of view to benefit or minimize the impact of those changes. So everyone's probably heard about all the increases in national insurance. So national insurance has gone from like 12% if you're an employee to 13.25%. And it's also gone up for employers' national insurance as well. So the interesting thing about this is for a lot of employees, even though the rate of national insurance has actually gone up, they may end up paying less of it in total. And the reason for that is the threshold from where you pay national insurance, which before it used to be just below £9,000, and now it's gone up to the full personal allowance, which is about 12.5. So it means even though the rate of national insurance for employees has gone up, it means that because the point where you start paying it has also gone up substantially, a lot of people will actually end up maybe paying less national insurance, which is great for employees. But if you're a business owner, what is slightly disturbing is that employers' national insurance has gone up, and the threshold where you start paying that employer's national insurance, unfortunately, has remained the same. So you will pay more there. However, the employment allowance, everyone loves the employment allowance. It's £4,000 a year. So the government cancels out the first £4,000 of your employer's national insurance bill. They've actually increased that to £5,000 as well. So potentially some business owners will end up paying less employers' national insurance. Others may end up paying more as well, depending on how the calculation fits your business. Another very sad thing, though, is dividend tax is also going up. So before it was set at 7.5%, which I always said it was really 6% for comparison. So now that dividend tax has gone up by 1.25. So it's gone up by the same amount as employers and employees' national insurance as well. So yeah, that's so I believe it's 8.75% dividend tax now at the basic rate. At the higher rate, it's also gone up as well. But really, you should really talk to your accountant about some tax planning to make sure you don't end up paying high rate tax. If they're a great accountant like us, then they're probably already automatically making sure you don't pay high rate tax, or at least making you aware of it. So yeah, there's a lot of swings and roundabouts here. Like some people are winning, some people are losing. But yeah, so that's those are the main changes. In terms of tax planning point of view, what has really changed? I can only think of one thing I would do differently now with all these changes, because if you think about it, everything has gone up proportionally to everything else. So the only thing I can really think about, and by the way, I'm only really talking about limited companies here, so I may do another video about sole traders, but what I'm really talking about now is what would a limited company owner do differently? Well, if you already take the full personal allowance as a salary because you have some employment allowance left, what that means is, yeah, you pay some employees' national insurance on that extra salary. So you might pay an extra 13.25% national insurance on that extra salary you take over the secondary threshold. But what you're also going to do is you're going to save a lot of money in terms of corporation and dividend tax. So yeah, by paying a little bit more national insurance and taking the full personal allowance as a salary, you save a lot more in corporation and dividend tax. So that hasn't really changed. But what is interesting is only people that benefited from the employment allowance, as in people who had staff or at least more than one director, could do that. That the changes in the whole system now actually means it's far more beneficial for businesses where there's only one director and no staff to actually take a higher salary as well. They will pay some national insurance on that higher salary by way of employers' national insurance, but they will save a lot more in terms of dividend and corporation tax. So overall, I wouldn't really do anything differently apart from if I was a one-man band limited company, then I would probably up my salary. Everything else has pretty much stayed the same. So it is worth just understanding if you're going to be one of the winners or losers, because if you got a forecast, if you're budgeting and you're trying to work out exactly what your outgoings are going to be, especially from a team perspective, then you should really understand what those increases or decreases in national insurance and mean from you, and even from a personal tax point of view. If they've added 1.25% to dividend tax, then you may have to set aside a bit more money for that as well. So a few £100s a year extra for that. So I hope you found this video useful. I try and avoid tax videos because they are not always the most fun or valuable. I still think focusing squarely on the growth of your business is far more important than worrying about what's going on with tax. So I would encourage you to make a note of this video, but not get disrupted from your growth plans. Just bear in mind, costs of everything are going up at the moment, so you need to make more money than ever, become more profitable than ever. So really just focus on that and keep watching the channel, because we will have lots more videos about growing your business and improving your profit and increasing the value of your business. So remember, if you did find this useful, remember to like, share and follow, and catch us in the next video, and I will see you soon.